Hello everyone, this is Percy the Market Guru, aka Percy FX Guru, and today's lesson is market structure. So without getting to the video, don't forget to subscribe, like, and click the notification bell for whenever I upload a new video you get notified. So let's get straight into it. So I'm gonna start by drawing a simple market structure for a bullish trend. So a basic bullish structure looks like this: up movement, down, up movement, down, up movement, down, up movement. So a basic um market bullish market structure looks like this. It's a trend to the upside. It's a trend to the upside, forming higher highs and higher lows. The higher high, this is a higher high, so I'm gonna put it in the HH, forming higher highs and creating lower highs. No, higher lows, I'm sorry, higher lows. So let me put this there, card clone, put this there, and then let me clone this one more time, clone this, put it down here, then I'm gonna edit this, then put in an L there, higher low, then I'm gonna clone this as well, clone, then I'm gonna move it here, then I'm gonna clone this as well, then I'm gonna move it here. So a basic bullish market trend moves, makes a high, then makes a low, breaks the previous high or higher high, depends where the market is coming from, breaks the previous higher high, moves up, make a new higher high, trends down, fails to break the previous higher low and makes a new higher low and moves up, breaking the previous higher high, making a new higher high, trends down, fails to break the previous higher low, trends up, breaking the previous higher high, and so forth and so forth. So this is how a basic trend, bullish trend market structure looks like. So now I'm gonna draw a bearish market structure trend. So a bearish market structure trend looks something like this. Starts from the market trending, goes down, makes a low, makes a high or a higher low, breaks the previous low, makes a new lower low, moves back up, fails to break the previous higher low, reverse, goes down, breaks the previous lower low, makes a new lower low, reverses, fails to break the previous higher low, reverses and breaks the previous lower low and makes a new lower low or trends to the downside. So this is basically how a bearish market structure trending to the downside looks like, creating new or creating higher lows and lower lows. So I'm gonna put this here and then say LL for lower low, or for a low and then lower low, but let me just say LL because the market is trending in a downwards trend, so we don't know where the market is coming from that point. This for illustration purposes, guys. Clone. So those are lower lows. Let me clone this, clone, and this is a higher low. This is a higher low, higher low. Then let me clone it again, move it here, clone it again, move it there. So basically this is a bearish market structure moving to the downside, creating lower lows, higher lows. So now we are gonna be doing a reversal, bearish and bullish reversal patterns. So this is one of the most, this is one of my favorite patterns. So I'll make an illustration of that pattern for a bullish trend, a bullish reversal. So the market is trending upwards. So it makes a leg, a reversal, another leg breaking the previous higher high, a reversal, another leg breaking the previous higher high, and then it reverses, breaking the previous higher low here, previous higher low here. It reverses, it breaks below it, then it reverses, making a new higher low here, then breaks to the downside. So this is a bullish reversal pattern. Some call it Quasimodo, some call it head and shoulder. For me, it's a bullish breakout pattern. But I don't just trade immediately when it breaks out here, when it breaks out here, when it breaks out this leg. I don't just get in here. When the market is trending up, in an up movement, like up, down, up, and then the market breaks the previous higher low in a bullish trend, right? It breaks the previous higher low. This is, for me, is not enough confirmation to get involved into the market. I first want to see if this leg here, after the breakout, I first want to see if this leg here is going to continue to the upside, breaking the previous higher high, or is it going to reject along this move here and then break to the downside. So after this move has broken the previous higher low, for me, this is a break of structure. This is a break of structure. So the previous higher high move from the higher high to a higher to a lower low, because this is a lower low now because it has broken the previous higher low. This is a higher low. So this leg here from the higher high went down, breaking the previous higher low and forming a new lower low, because this low here is lower than this previous higher low. So after breaking that, I first wait for the market to trace back into the previous leg to see if it's going to break the structure above. If it fails to break the structure above here and goes lower, breaking the new lower low, this is now a high probability sell for me. This is a high probability sell for me. The moment it breaks, it reverses from here, breaking this structure again, coming from that trend up there. This is a confirmation that now the market is interested in going for lower prices. So this is a bullish reversal pattern. So now I'm gonna do the bearish reversal pattern. So let me just delete that and then start so that was a bullish reversal pattern. So now we're doing the bearish reversal pattern. So the market is going to start from up here, trend down, up, creating a new high low, breaking the previous lower low, making a new lower low, reverses, fails to break the previous high low, makes a new high low, breaks the current lower low, trends up again, fails to break this low, goes down, breaks this previous lower low, and then breaks this higher low here, forms a new higher high here, and then fails to break this lower low here, makes a new lower high, and then goes on. Let me just lock this. So this is an example of a basic bearish downtrend reversal. So from up there, the market goes down, fails to break previous highs, keeps breaking lower, lower, and lower, showing interest to the downside. And then from this point here, when this leg here, this from the lower low, this leg here, from the lower low, when this leg breaks the higher low here and forms a new higher high, because it's a new higher high because it broke the previous higher low. It's no longer in a downtrend. It broke the previous higher low from the lower low, forms a new higher high, then breaks the previous high low. So what I do after this move here, I wait and see if the market is going to continue going to the downside to break the lower low which we just came from after breaking this higher low. If it continues, it's a trend continuation to the downside. But if it fails to break below this low here and keeps going to the upside and breaks above this new higher high, for me, it's a high probability buy setup. Okay, so now let's go to a live chart now and see some of the examples that we can find. Sorry about that. So this is a Euro USD chart. So I want to look at this price here. You can start it from down there, it doesn't matter. Start it from down there, doesn't really matter. What I'm interested in is this price here. So if you look at, let me change the time frame as well. Let me go to 1 minute. I think 1 minute is a bit more. It's a bit more. It shows a bit more than the 5 minute. Where is that price? Doesn't really matter anyway. So let me just start here. If you look at this price here, it's a uptrend. Even though you hardly can see it. Some will say, oh, relatively equal highs. Yeah, they are relatively equal. They are equal, relatively though. But I look at highs and lows based on the price. If it doesn't break the price of the previous high or previous low, for me, it hasn't broken. So it has to break that structure to tell me that this has been broken, or the structure has been broken, and so forth. I don't usually use trend lines. I'm just using this for an illustration purpose so that you can see what I'm talking about. So in this area here, right, this is what's happening in this channel, this bullish channel. The market goes from here, right? So, sorry, let me undo this. The market starts from here, goes up, comes down, goes up, comes down. This is very faint, goes up a bit here. If you look at here, the market went up a bit and then sold to the downside. So I don't usually take a trade unless it breaks out, breaking this here. So it went from here up, down, breaking this previous, or this lows here, previous higher lows here to the downside. So I want to wait for like a significant movement like the one we had here. So this, after this move fails to break, usually I use a candle. I don't usually wait for like for example, this candle here. Let me show you. This candle here. This candle here. This candle here. The moment it makes an opposite movement from this leg that breaks out here, that breaks this structure here, this higher low here, from this high. The moment it goes down and it breaks this structure here, I wait for a bullish candle that's gonna close bullish, like this one here. That's gonna close bullish. If this candle closes bullish like it did here, and then the next candle that comes after it, it's a bearish candle that opens up and closes below it. This is where I usually take my entries. If I don't take my entries here, I wait and I put my entries around the breakout here, or just above this candle, this bullish candle. Either I can take my trade here after this red candle here has broken out, or I can put a sell limit here with my stop loss above the previous high here. I don't know if that makes sense. And then same goes with bullish. I'm sorry, bearish market structure. So I'm just going to use an example here. And I use this as an example here. So from this point here, let me use from this point here, or let me just start here. From this point here, the market moves down, up, down, you can say down here, up, down, up, breaking the structure here, and then down, failing to break the structure here, fails to break the structure here, and then it goes up here. So here, I know it looks kind of weird. This is how it is, guys. The market will never show you a clean setup. It will always show you a setup, but it's never going to be as clean as you want it to be. So the market was down, trending. Then this up movement here broke the structure here. So after it breaks the structure here, for me, I don't take a buy yet. I wait for the market to go down to see if it's going to break this lower low here, the previous lower low, where we came from before breaking the higher low here, the structure here. So I wait for the market to pull back to see if it's gonna break below here. So if it fails to break below here, I wait for it to break above this new higher high here, which it did here with this candle here. So the moment this bullish candle breaks out of this higher low here, higher high, breaks out and closes, I'm taking my buy here. If I don't take my buy here, I'm gonna put my buy limit below this candle, this white candle here. I'm gonna put my buy limit there. The moment it closes, I immediately execute. If I don't execute, if let's say this candle is too long, maybe it's like somewhere around here, I'm gonna put a buy limit here below the candle. If it's short like this, I'm gonna execute. Then I'll put my stop loss here below the low. So if it breaks, closes, I take a buy. If it's too long, I don't buy it. I want it to be a bit smaller so that it mustn't, because if I enter here, it's gonna drag me down, and like my stop loss is gonna be here. It's gonna be a long day. So I rather put a buy limit if it closes there, but if it closes here, I take it as a buy and I just buy here. Then I let the market do its thing. I let it move. Simple as that. Every time before it reverses, even here, this is a perfect example. Let me just do this as a bonus. This is also another perfect example as well. It's a nice one. So the market is trending up. This is a bullish reversal pattern. The market is trending from here, goes up there, comes down here, there, then it goes crazy, and then it breaks, small reversal, and then then yeah, then the rest is history. See, it's going down, it's trending down. So let me just explain this quickly. So the market went up, right? Let me just do this so that we shrink it better so that we can see. So the market went up from this point, went up, small retracement, went up, making a higher high, then played around, then to the downside, breaking this tiny reversal here, breaking it here. So the moment it breaks it, remember, I don't get into the trade. It's a break of structure, but I don't just get into the trade immediately. I first wait for a first bullish candle that goes the opposite direction of the breakout. The first bullish candle that goes and closes, I know that it's a retracement. So if the market keeps going, I wait for it to break this. If it doesn't keep going and it goes down, it breaks below this candle here, this candle and closes here, I take it as a sell. It's a high probability sell for me, the sell. So I'm either gonna take it on this red one here because it broke and closed below these candles. This one didn't close below it; it failed. It just closed here, and then there was market was playing around, So I'm not gonna take it here. I want a strong movement to the downside and a close. If it's here, I see that, oh, it's a bit too far from my candle. I put a buy limit where above my that bullish um candle. I put a sell limit. I'm sorry. I put a sell limit up there, and then yeah, the rest is history. From there, it just keeps trending, going down, and all that. So this is the lesson on market structure. So thanks for watching, everyone. I don't want to keep these videos long. I just want to keep them short, precise, and straight to the point. I hope you found this helpful, informative, and thanks for watching. See you guys next time.